Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me Anuj and Sonia. Well, yes, there will be a lot of noise about the CAG and Rafale. We had enough of it yesterday. But the market at the moment is not looking at those issues. The macro issue of polls will perhaps prey on the market's mind a little later. It's not yet the most important consideration. The most important consideration continue to be, at the moment, I think it'll be crude, because now it's lunging towards 64. So yesterday I was a little surprised that in spite of a fairly decent inflation number, the markets were not all that cheered. Bond market was, but it didn't pass on to the equity markets. But today this negative news could be a little bit of a problem for the market to handle, because the market seems to be willing to look at bad news. But even if this macro is a little bit of a worry, I mean, we're just at 64, it's not a huge worry. The micro could be positive, which is Yes Bank being told by Reserve Bank that there is no divergence. Now, for me, it's not just Yes Bank. It could also be interpreted as a kinder regulator than the previous regime. And therefore, it's possible that Kotak moves. And if Kotak and Yes move, Kotak on assumption that some kind of a settlement does happen, or at least he's given more time because it's a kinder dispensation at RBI. If both these play out and the market thinks like the way I think it might think, then there is something positive coming for the Nifty Bank, which has been actually the weak link. I don't think these news have the potential to reverse Indian underperformance, which comes from a certain fragility in the debt market and over-levered Indian companies, and therefore some question marks on growth. I don't think that changes. So I would still watch out to the lower bound, 10,800 and then 10,700, 10,600. But I think today the Nifty Bank has something to cheer.
Okay, and the Nifty Bank has something to cheer. We have something to cheer. You're back after 3 days. We missed you. Lata, good morning. Anuj, morning. In the last 3 days, there's been relentless selling by foreign investors. So that, I think, is something that, the street would take note of. Almost 1,300 crores of selling is what we've seen from FIIs. And we do have, this big underperformance in the mid-cap space, right? In addition to all of this, Brent crude is now back at $64 a barrel. So that's something that will not work in our favor. And we've been talking about this, Anuj and me, about how this underperformance that the mid-cap index has seen. In this year so far, the Nifty is down just 0.5%. The mid-cap index is down 9%. And it's not just your ADAG stocks, your Z Group stocks. It's, marquee names like Ashok Leyland, Godrej Consumers that have fallen 20-25%. Anuj, morning. The Nifty is now down almost, I think, 300 points in the last 6 sessions. Is it too late to short this market, or do you think that it can still be shorted?
Morning, Sonia. The best time to short was yesterday, and we made this point even in closing bell that perhaps that short trade will work. Look, I'll talk about the trade pattern a bit later. Let's first talk about where the broader market is, I think I've been making this point for the last 1 month now, and adding some more new research every day. Now, just look at where the market is and compare that to where the broader market is. The mid-cap index right now represents a Nifty level of 9,000. The index itself, forget about the stocks. The small cap index represents an index level of 8,800. I mean, the small cap index is where, it was when the Nifty was at 8,800. And now, and I'm only taking the blue chips. We all talk about long-term investments into blue chips, that kind of environment for equities. Let's look at blue chips. Bharat Forge, right? It's a blue chip, 8,200. And the Nifty corresponding level. Ashok Leyland, 8,000. HPCL, 8,000. Motherson Sumi, 8,000. LIC Housing, 7,700. Glenmark, 7,500. And of course, we reserved the best for the last. Tata Motors is where it is now when Nifty was at 5,000. Of course, you could argue that that's selective data, and there are a lot of stocks which have done well as well, exactly. But 2/3 of the broader market is in some kind of bear phase, and that's something which cannot be wished away. I personally feel that this is still the excesses of 2017 being taken out. 2017 was just a spoiler year for equity markets where everything went up so much, like the likes of Graphite and HEG. So many of these stocks are correcting their excesses. We are only looking at stocks correction from the highs, but we've forgotten that how some of these stocks became 10 baggers, 12 bagger, 20 bagger, and that of course in equities at some time will have mean reversion. But there's a market to trade. I think the risk reward does not favor a fresh short. Initiating a fresh short, you should have been short yesterday, and the market gave you 2 opportunities: a gap up yesterday and that 1 to 130 rally. That was the time to short. If you're carrying short, perhaps you want to see where the market reverses and book if you want to book. The Nifty is very close to an important support mark of 10,750. Look, it all boils down to risk reward. If the SGX Nifty is right, we open at somewhere around 10,760. Then is the risk reward in your favor, considering that we are so close to the lower end of the band? Anyway, the lower end has been 10,650. So it does not perhaps favor a short in the morning. It was, I think, yesterday. The market's giving you periodic opportunities. I think it will continue to do that. Logically, the move on Nifty to 10,600 and Bank Nifty to 26,500 is due, but it may not happen in straight line because we've already seen 6 days of selling. And it's also the first weekly options expiry today on the Nifty. 10,750 is crucial. I think let's see if that holds or not. If that holds, perhaps there could be some covering. If that gives way, then there could be more selling. But the weekly options, first weekly options expiry.
I was going to ask you about the Thursday effect. You know, it's also the Bank Nifty options day, expiry day. And therefore, all this stirring of the pot on Yes Bank and Kotak, and of course, DHFL is not part of Nifty Bank. That might be the negative factor. That might give a bit of a reprieve for the Bank Nifty bulls. The fact that it is expiry day and you're getting probably a good news which will be extrapolated to another heavyweight like Kotak.
Actually, on Yes Bank, you know, Anuj, the other thing that we were just discussing, from a divergence of almost 6,000 crores last year, suddenly to zero divergence, is it something that the street will question in terms of credibility?
Look, the issue is Yes Bank has once again got a lot of shots because of what happened with the DHFL issue and all. Remember, on the day of the result, we had warned and said that, look, this is just a short covering move and don't chase it. The stock will go back to its previous levels. It's done that. Now it's gone back to 160. So in the morning, what you will see is a lot of short covering because all of a sudden, this news was not there in the market. We knew that at some point divergence report will come, but nobody knew it will come so soon. Because if that was the case, yesterday the stock would have rallied. At least some rally would have been there. The fact that yesterday it ended at the lowest point and for last many days it's been falling. And it's been falling because the market believes that there's some kind of, for right or wrong, some kind of linkage between DHFL, India Bulls and Yes Bank. That's what the market believes. And that's why, it's punished some of these stocks. So that's why there are a lot of shorts in Yes Bank. What you will see in the first few minutes is that just powerful short covering. My sense is that, from the foreign investors' point of view, they may not actually like the fact that there's a kind of dispensation at work. There's some kind of India premium because of RBI. And the first example of that was when on the rate cut day, you had a big fall. Ideally, you should have had a big rally for a surprise rate cut. But the fact that there was a decline in the market, my sense is rallies in Yes Bank will be sold into at some point. Perhaps it could be 180, it could be 200. I cannot time it, but yes, you will see a big short covering bounce in the first hour. But if you're chasing it, I think you could get into trouble today.
Okay, well, I cannot speculate that far. For me, the sense is that there were a lot of shorts in Yes Bank and there was an expectation of kitchen sinking by the new management. Now, if the new management is entering with a good behavior certificate from the regulator, then the urgency to do kitchen sinking will not be there. So my sense is it's a 10% up start and then I don't know.
Okay, well, let's see which way. Yes Bank could be one of the stocks of the day. By the way, guys, it's Valentine's Day, right? So happy Valentine's Day to everyone. Hope you find a lot of love, whether it's with your spouse or with your favorite stock. But let's take a look at what our wise experts have to say.
That's well put.
As we head into trade this morning, Ridham Desai, in fact, of Morgan Stanley is our wise expert for the day. He says FPI outflows in Q4 FY18 were slower than the market's moves, which resulted in a rise in FPI stakes, contrary to the market's belief that they are falling. Morgan Stanley expects breadth of ownership to pick up from current levels. He says consumer staples and energy remain the largest overweight for FPIs, while financials are the largest underweight.
Actually, Sonia should have at least worn a pink attire. Okay, let's get some money market views. Pramit Brahmabhat of Veracity expects the spot USD INR pair to trade in a range of 70.50 to 71 for the day.
And on the bond market, Ajay Magnolia of Edelweiss says the bond markets are expected to consolidate on the rally that followed the lower than expected retail inflation reading. He says it comes on the heels of the dovish MPC commentary and will keep the markets in good cheer. However, he adds an upward drift in crude prices might curtail the overall momentum. That's important. He expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.32% for the day.